Hello friends, today we are taking a quick look at 3 companies showing exceptional growth. As investors, we know that strong growth is one of the most powerful factors driving a company's future success and ultimately its stock price. These 3 companies aren't just growing, they are setting the pace in their industries and creating some super interesting investment opportunities. So let's start with Adyen. It is a global payment technology company that enables businesses to accept e-commerce, mobile and point-of-sale payments across multiple platforms and regions. So the valuation, price to earnings is 39.5. That is very, very high. But let's see some fundamentals. Return on invested capital, 24.1%. That is really, really healthy. We like to see it over 10%. Then we have net profit margins, 9.6%. And that is also really nice, especially for this industry. Years to pay debt, 0. So they have no debt. That is something I always like to see because, as we know, a company without any debt has a very slim chance of going bankrupt. And when we look at the growth, we see that the revenue growth is 28.5%. Free cash flow growth 25.4% and earnings per share growth 54.5%. So that is absolutely exceptional. I mean, earnings per share is probably caused also by the fact that this company is buying back its own stock because earnings per share growth is much higher than the revenue and free cash flow, which are also really, really nice. And this company doesn't pay any dividends, and that's absolutely fine. If we have a company that is growing so fast, then we don't actually need dividends. What is also important to mention is that this company has $10.3 billion in cash. So not only no debt, but also a lot of cash. A second very interesting company is Paycom. It is a cloud-based human resources technology company that provides comprehensive payroll and HR management software solutions to businesses. Its price to earnings is 26. So it's also rather high, but it is actually close to the average of the S&P 500. As far as I remember, right now the average is actually over 27 points. So it's not that bad. I mean, the whole market is really expensive, so it doesn't mean that this company is not. But when we compare it to the average of the S&P 500, it doesn't look that bad. Now, return on invested capital, that is 30% in the last 10 years. So that is really nice. Net profit margin, 20.7%. Very, very impressive. And again, no debt for this company. So another one without any debt. And growth, the main reason we are looking at this company. 28.7% when it comes to revenue. Free cash flow growth 45.4% and earnings per share growth 55.2%. So absolutely great. It is actually even better when we look at the free cash flow because it is over 45%, so it's better than Adyen. Really, really exceptional growth. And what is quite surprising, this company actually pays dividends. It has a dividend yield of 0.6% and a payout ratio of 18.3%. So it's a small dividend. It's like a cherry on top. It's not really needed, but it's nice to get some extra cash. But now we get to the third company, which is actually very nicely priced. Evolution AB is a leading provider of live casino gaming solutions and other online gaming products worldwide. It has a price-to-earnings ratio of 12.6. That is really affordable. I mean, it looks nice. And when we look at the financial health, results are also impressive. Return on invested capital, 42%. Margin, 57%. That's a net profit margin in the last 5 years. So really stable and profitable company. And no debt. Another company without any debt. And the growth, 43.1% revenue growth. Free cash flow growth, 55.7%, and earnings per share, 53.6. Absolutely exceptional on all fields. It's incredible. It's really finding companies that grow so fast. And that's not like in the last year or two. This is a growth from the last decade. So that's really impressive. That is something we shouldn't just, ignore. Dividend yield, 3.8%, and the payout ratio, 47%. So actually, on top of this incredible growth, very nice financial health, we get a nice, decent dividend. So we get this dividend, we get great growth, and a nice price. That is a pretty impressive combo. But there are, of course, risks and problems with the company. But if you would like to learn more, then just check my recent video about Evolution AB. What was very surprising and great to see is that all of those companies have no debt. So this growth is not powered by leverage. It is all organic. And that is a huge difference because it is much safer and much more sustainable. Okay, let me know your thoughts about those companies and what other types of businesses you would like to see in this rapid fire format. And if you would like to learn more about Adyen, Paycom, or Evolution, then check out my more in-depth analysis of those companies. Thanks for watching and see you in the next one.